Welcome back. And in your business news, Empower, the leading district cooling services provider in the region, recorded a net profit of 190 million dirhams for the fiscal year ending December 2012. This represents a 17% increase over 2011. Additionally, the company's total revenues reached 701 million dirhams, an increase of 5% over the previous year. So with that, let's now take a look at the stock indices across the GCC. Dubai-based contractor Arabtec has replaced its founder and chief executive and is seeking a new finance chief as part of a boardroom overhaul, which was instigated by its largest shareholder, Abu Dhabi investment fund Abar. Arabtec also plans to raise $1.8 billion in new capital through a rights issue and convertible bond, the company said in a statement on Dubai's bourse. Abar has been exerting its control on Arabtec since it started building a stake last year. It had already replaced 4 board members with its candidates and named its chairman, Qadim Abdullah Al-Kubaisi, as Arabtec's chairman. On Wednesday, Arabtec said Chief Executive Riyad Kamal resigned and was replaced by Hassan Ismaik, an active Abu Dhabi-based private investor who was made a board member last August. The company said it is looking to hire a senior management team, including a finance chief as well as an operations head. Investors reacted to the announcement of the capital raising, with the company's shares trading down 9.8%, close to the 10% limit for a daily loss, reaching their lowest since the 17th of January. Dubai Aluminium, or Dubal, the world's largest single-site primary aluminium smelter, reported gross sales revenue of 9.78 billion dirhams and a net profit of 1.58 billion dirhams in 2012, despite low aluminium prices. According to a statement which was made this week in a local daily, Abdullah Kalban, President and Chief Executive Officer of Dubal, said the company's achievements in 2012 reflected a combination of higher production and sales volumes, coupled with sustained focus on controlling the cash conversion cost, despite increasing pressure on the purchase prices of raw materials. Compared to 2011, when the company recorded total sales of 11.144 billion dirhams in 2012, sales revenue declined by 12%, largely due to a decline in aluminium prices. Dubal, which began operating in 1979 with an initial production capacity of 135,000 tons per year, has since undergone a series of major expansion projects, boosting the production capacity of its Jebel Ali plant more than 7-fold to over 1 million tons per year. The use of advanced in-house developed technologies that offer improved productivity and other operating benefits, together with higher amperage levels and efficiency improvements, enabled the world's leading smelter to produce over 1 million tons of hot metal in 2012. The Department of Economic Development witnessed a 9% increase in licenses issued in January as compared to the same month of last year, as economic activity in Dubai remained on an upward curve. While 1,310 licenses were issued in January 2012, 1,428 were issued in January 2013, reflecting increasing investor confidence in Dubai. The commercial sector saw a 69% increase in the number of licenses, the highest among all sectors in January 2013, while the professional sector accounted for a 28% rise, followed by the tourism and industrial sectors at 2% and 1% respectively. The total number of licenses amended in January 2013 was 5,937, while the total number of renewed licenses reached 8,085. The total number of businesses registration and licensing transactions reached 48,806 compared to 44,376 in January 2012, an increase of 10%. The UAE's export growth is expected to remain solid, and GDP growth is forecast to pick up in 2013 to 2014. And that's according to the latest HSBC Global Connections report. HSBC added that the non-oil economy will continue to recover as construction, tourism and trade flows generally continue to recover. India, China as well as Vietnam, which are heavy energy consumers, will be the fastest growing export markets for the UAE in 2016 to 2020, as well as in the year of 2021 to 2030, the bank said. As a major oil exporter, the UAE's growth and trade performance has been boosted by high world energy prices in the past few years, which saw exports growing by over 30% in 2011 and by about 15% in 2012. High oil revenues have in turn driven rapid import growth, and the report also said that economic activity would continue to be driven by high state spending, with the main focus still being on construction projects and the property sector. However, Dubai is continuing to develop its trade, tourism and logistics sectors.